are in listen-only mode.
Good afternoon, everyone. It's Brian Caprice from Keep Trading Simple, and welcome to this week's Nadex Weekly Charts and Analysis. Happy New Year, everyone. January 4th. I can't believe I'm saying that already. It feels like we were just doing, banners and things like that for 2021, and now we're doing 2022, and I haven't even updated the slide correctly. Let me fix that real quick. There we go. 2022. Amazing. I'll be messing up checks forever if anybody out there is still using checks. So, with that said, let's just dive right into things. We have a bunch to talk about today. We had some metaphorical bombs drop just a little while ago, in regards to kind of what this year is going to look like. And I don't think the market was ready for it. We've had some profit taking in Apple, giving NQ a couple curves. The yen is just completely imploding. Again, great for Japan. And it's very interesting seeing some consumer sentiment or seeing what the trader sentiment is and how high and how many people right now are short in something that has been just absolutely exploding across the board. So, a lot to talk about. Let's just go right in. Before we begin, though, I do have to make sure. We'll start with this first. Actually, let's do the disclaimer first. You guys have heard this before, but all of you know this. That trading on Nadex involves risk and may not be appropriate for all. Members risk losing the cost of another transaction, including fees. Now, you should carefully consider whether trading on Nadex is appropriate for you in light of your investment experience and financial resources. And any trading decisions you make are solely your responsibility at your own risk. Past performance is not necessarily indicative of future results. None of the material presented herein is being construed as a solicitation, recommendation, or offer to buy or sell any financial instrument on Nadex or elsewhere. Nadex is subject to U.S. regulatory oversight by the CFTC, and Nadex is a registered trademark of the IG Group. So, for those of you that know me, you guys have heard this before, but I'll give you the quick 30-second spiel real quick. As I mentioned, I'm the president and CEO of Keep Trading Simple. I've been doing this for, I hate to say a long time, but I just have to come to that grips. You know, it's 2022. I got to come to grips to it that I'm old, but I started back in 1999, if any of you guys remember Y2K. Uh, I'm not a 12th generation trader, right? I don't think actually there is 12 generations for the traders, but you guys know what I mean. My dad actually was a programmer for IBM, one of the ones and zeros guys. But I'd always had a passion for the markets. It's something I entered and started doing at an early age. Um, Learned the traditional way, right? Seminars, books. There was no such thing as YouTube back then, so learned a lot of the wrong ways to do things the first time. It's one of the main reasons why I choose to teach this day and age because, again, I made so many mistakes. And anybody that's a parent out there, you guys know, you always want your kids to, do things a better way than you did it, and that's why I do what I do. So, I learned stocks options, right off the bat. About 6 years in, I found the foreign currency market and absolutely fell in love with it. Love currencies. Just one of my favorite things to trade. I love the 24-hour nature of it. I love the leverage of it. Learned to trade futures. I became a financial advisor. I worked for one of the big three banks for a bit. Learned all about bonds there. Great experience. Didn't stay there long. I realized that I felt more shackled as an advisor than I did as an educator. And I just again I want to help as many people as I can. Actually, I can say that I was in New York City. I lived in the financial district. I'd walk past the New York Stock Exchange every single day. It was awesome. I could actually see the bull. If you guys have seen the bull in New York City, the bull was actually right outside my office. I could look at it every single day, and I used to have lunch at a nice little sandwich shop right next to the bull. So it was kind of cool. I got to hear all the stories, got to have happy hour where all the floor traders are drinking. I got to hear all kinds of amazing things up there. Great experience. And then after that, I traveled for about 6 years around the United States and Canada, helping traders find their own way in the markets without having to need the financial services industry. So, um, now I do this. In this day and age that we live in, it's very easy to teach remotely because, I mean, basically, as traders, we don't have an office. Our office is at home. And, again, so COVID really didn't change much for me. And now it's even more fun. I get to talk to more people now because more people are trading, and it's a really, really great time. I do need to update this picture. Actually, I just took a great picture of my son. I have another son. There's actually four little ones now. The two boys there are actually as tall as Melissa is there. I obviously have a beard. For those of you that again, with COVID, I grew a respectable beard. My wife teases me now that, like, hey, wait a second, maybe you should be Santa when you're older because you love kids. And I was like, yeah, we'll see. And Jin is actually in that picture. She's, I think, one. She's now three, so she's obviously much bigger than that. The boy is about that size right now, the new boy. Well, I guess he's only 3 months, but he's on the bigger side. So, yeah, I need to update some things there. Maybe rather soon I'll do it. With that said, My trading style is a little bit different. I am not a huge, heavy indicator based trader. I know how to use them all. I feel that most of them are lagging. Most of them have major holes. I'm a price action trader, so I'll be using supply and demand today. You guys will see a lot of horizontal rectangles. I'll draw some triangles. We'll draw some lightning bolts. We'll draw some check marks on the charts. But you'll see my style of analysis is rather easy. I am very much an if this then that trader. So a lot of the analysis we're doing today, keep that in mind, right? I am not a market order person like we're going to buy or sell right now. I am an if this then that trader. So a lot of the trade setups we're going to talk about are meant for more of kind of sometime this week. I don't know when they're going to trigger, but whenever they do, that's when we potentially take them. All right. And again, any trading decisions you make are your responsibility. There's no such thing as, well, Brian, you said, yeah, I said this is my analysis. If you guys take the trade, that's entirely up to you guys. All right. With that said, let's go into the agenda for what we're going to cover today. First thing, upcoming news events. We had some news today. And when I say upcoming news events, I'm talking about the economic or financial news releases. Tomorrow is going to be a big day with FOMC. Today, the bombs we got, I don't know if the bombs are foreshadowing what we're going to see tomorrow, but I will say, you know, we have the first kind of you know shots in the sand, for lack of a better word, right? We know that this is going to be a big year. Inflation is a major problem. With that being said, mentioning interest rates, I think, is something that you need to kind of we just need to. It's the elephant in the room. Everybody, you got to talk about it. And Kosh Carey made some big comments, and I'll review those in a few seconds. But we're going to look at the rest of the news events that we need to keep our eyes on. As you guys know, I absolutely love news trading. If you're not news trading, or you heard from some guru that, oh, that's bad, you never want to do that, you have no idea what you're missing out on. Um, and again, trading the right vehicle, right? A lot of you will see Nadex in the bottom left hand corner. If you don't know what that is, it's a great buy. It's a regulated U.S. binary exchange. And again, if you guys don't know what it is and you're not trading news, you're absolutely missing out on easy opportunity, and you should take advantage of it. If you guys want, you can message me, and I'll send you a link to get a demo account for it. Then we're going to cover indices. Obviously, today's pretty interesting. Tesla and Apple are really kind of messing it up for the NQ, especially after Apple hit a huge day yesterday. And again, Tesla and Apple both blew out of the water yesterday. Today, it's more of a pullback, some profit taking. Some bad press for Tesla, but you know what they say? There's no such thing as bad press. I would have to agree with that as well. I think it's easy to be angry at someone when they're doing so well, right? But haters got to hate, I guess is what they say. But we'll see. I don't, what they're saying is not, I don't believe, my personal opinion is it's not really reality. And I don't think, again, business is business. Then we'll cover Forex. There's a lot going on in the Forex market right now. This is going to be the year of Forex. I'm saying it right now. I know there's a lot of, we always joke that there's, some big names out there that watch these presentations, because we'll say something and then like it happens like a little while later. This morning I talked about a double raise, 2-in-1 raise for this year, and then all of a sudden we got that we were going to have 2 raises this year, like half hour later. So I don't know if Kosh Carey listens to us, but pretty funny that within like an hour of us talking about it, he announced it. Then we'll cover commodities. OPEC Plus meeting today. We'll cover that in the oil section, but commodities are kind of a hot topic right now. With whenever we talk interest rates, the first thing you think about is inflation and gold. Definitely been some movement in that market. Silver as well, and then again, oil and natural gas. Natural gas has been kind of all over the place. It's like a slinky going down the stairs. It goes up, it goes down, it goes left, it goes right. And oil has been an interesting market. The last bit of news we had from OPEC Plus was basically like, hey, we can manage it. Don't worry about it. Trust us. They kind of sound like a used car salesman. So with the, we'll manage it. Don't worry about it. We got it. We got it. At the same time, they're profiting from the fluctuations and the increase in, oil prices. So, yeah. So with that said, these are the 4 things we're going to cover. Let's go right over into the charts. Let me click. I got to click the right one here. Let's go over here. All right. And I'm going to start off with, we're going to start off with the VIX. Okay. Oops. There we go. Actually, you know what? I forgot. I had it set on purpose. Let's go over the news first. So this morning, we already got the OPEC Plus data. And again, I'm going to cover this when we get into oil. You can see kind of down here what they talked about. The trust us statement is, where is it? We're flexible enough to manage demand fluctuation. Right. We'll talk about that in oil. But again, this morning we saw ISM manufacturing. It was a miss. It was negative. And we saw jolts. also miss, and there's more to this story. Jolts' job openings, seeing the job openings are down is kind of a little bit of a head scratcher. And I think the market was not necessarily prepared for that. At the same time, we also saw that there was a record 4.5 million workers quit their jobs in November. It was a new record high. And again, it's part of it because of mobility, but again, it's one of those things that I get why people are leaving their jobs if they're happy and they think they can get more elsewhere, but it does hurt overall productivity with everything. Um, kind of an interesting kind of statistic, and I get it with everything going on right now, but yeah, it's interesting. Kush Curry, here's what we heard. This is the big bomb: the two rate hikes this year. Actually, I have it right up here. And again, previously they saw no hikes until 2024. We had an entire, basically 2 years until we really saw big rate hikes, and now they're saying there's two rate hikes this year. I mean, if he would have said 2023, that's one thing. And I think everybody, I mean, they've been calling for interest rate hikes. But the fact that we're talking about it like this, that, previously saw no hikes till 2024, and now it's 2022, it's 2 years sooner. Wow. That's a big one. And he says the cost of ending up in a high inflation regime are likely to be greater than the cost of ending up in a low inflation regime. So, again, is there political pressure in this environment? Yeah, probably. There's probably a decent amount of it. But again, that is a big, big change in stance. And that's why we're seeing some of the market movement. Now, I'll mention VIX in a second. That is directly related to the VIX. As far as the rest of this week, tomorrow in general is going to be a pretty big day. And the reason why I say that is because ADP non-farm employment change, this is kind of a big one. How many people are getting hired back? How many new people is there? It's supposed to be lower than before, right? And again, we kind of see that in this time frame, and but again, could this be a blowout number? It could be, and again, that could be a big stimulus to the market. Building permits for Canada only affects currency traders. Again, that's a big jump in building permits. New permits means, again, the economy is recovering and exploding back again. That's a good thing. This could be a nice little boost for the CAD, especially after today. And then FOMC meeting notes. Now, it's hard when it's funny. You click it like 8 times a year. They meet, they announce Fed things. I mean, there's no expectation that they're raising rates or anything like that, but they are laying out the year. And we know the tapering's coming. We know that most of the tapering will most likely be done by March. They're talking about, an interest rate hike in June. The stance really matters, okay? Raising interest rates absolutely solves our inflation problem, right? We're at 39-year highs. It has to be fixed, okay? Again, why Kashkari is talking about we're raising it twice. Depending on the tone, if it's a weaker tone, saying, yeah, because of Omicron, we may slow it down. But really, the disruption from Omicron, besides like flights and things like that, my mother was actually supposed to fly out today to see my sister. Yeah, it was partially the snow that we have in Maryland, but, it's also because of staffing. There's been tons and tons of flights canceled, right? They don't have the staff to fly the planes. They don't have the crews. And you're seeing in all the service industries. That's really been the biggest effect, and that's why now we only have to quarantine for 5 days instead of 10. And I guess originally it was 14, right? And then went to 10, and now we're down to 5 because we just don't have people. So, question is it safer or not as dangerous as it was before, or were we wrong before when we said 10 to 15, or are we being dangerous now playing with fire and saying 5? I mean, a lot of questions we don't really know, but their stance is going to make a big difference on what we see, particularly tomorrow in the markets, and probably for the rest of the week, right? As the market adjusts. Thursday, we have unemployment claims, and look at this. This is this is pre-COVID numbers in the boom cycle, right? So raising interest rates right now, I mean, unemployment claims are lower than what they were before COVID actually started. So it tells you kind of where we are with the unemployment situation. Then we have services, and again, I expect services number to be a bit of a miss as well. I think services is going to be hard to grasp right now. Again, what are the effects of Omicron? 5 days, 8 days, 10 days. Roll the dice, is it odd or even? I mean, I think there's so much in there that people are talking about. Friday, obviously, first Friday of not only the month, right, but also of the year. We got the big non-farm payroll number, and right now it's expected to be 200,000 higher than what it was last time. Now, last time we had a little bit of drama, right? The forecast in December was that we were going to have 550,000 new jobs, right? We only had 210. That was an earth-shattering thud, right? Right? Yeah, we'll see kind of what the preliminary data looks like, again, with ADP. But again, the ADP number and the overall government number are different numbers, okay? So we'll see what this number comes in at. Average hourly earnings, it's great that it's going up by zero point 0.4. We've seen inflation CPI go up zero point 0.8, 1.5. So it would be great if we are getting paid more. And again, this number last time also was a disappointment, right? We were getting paid less and inflation was accelerating even faster, meaning that our dollar's not buying us as much as it did before. So again, big number. And then the unemployment rate. Will it go down to 4.1? I don't know. I think this is a very, very interesting number. You can see last time it was a huge drop down, right? They've been missing this forever. I think eventually one of these things we're going to get a jump up, right? You got 4.5 million people, again, leaving their jobs. Some of them are getting hired at other places. Some of them are not. Some of them are retiring. Some of them are. I mean, again, there's a lot of things going on. 4.1 is really kind of historically low. It was such a big jump last time. It's like, how could they be so wrong last time and then still continue? Wouldn't be surprised if there's actually an adjustment up to 4.3 and then it becomes a 4.2. So I think this 4.1 is a little bit on the low side, but I think the real big thing will be the employment change number. Because remember, unemployment rate is not 100% accurate. Okay. If you've been out of the workforce too long, you are no longer included in that number. So, you can have it say 3.6, but that, if your utilization rate is rather low, right? If it's only at 65%, it means it's not 100% accurate. And we're kind of at the stage right now with the recovery where this data is no longer accurate. We should be looking at how many people are getting hired back in a new job. So, again, this is a bang bang week. Again, with Kashkar's comments today, FOMC tomorrow. Thursday will be a little bit of a slow day, kind of reeling from the FOMC meeting notes. And then bam, right into non-farm payroll, which is arguably the biggest news moving event or the most important news event that exists on the economic calendar. Okay. A lot going on. Again, this is Forex Factory. I like it because it's simple, it's plain. If you guys need a little bit more advanced, don't forget, head over to Daily FX. You can actually go to their economic calendar. And if you want it to alert you, you have the ability to kind of set this up and add it to your calendar, and it'll come up and it'll alert you a bunch of things as well. Plus they have a little bit more. I have low set on here right now. It should actually be just this. But again, you'll see kind of what we have going that's just for today. Next 7 days, you can kind of see all the things in there with a little bit more data and learn about what they are. So, yeah, a lot going on first week. One of the things that I do like over here too, and I'm going to bring it up now before we get too far ahead. Don't forget that they have, because they are linked with a brokerage firm, they actually have client sentiment. Okay. One of the things I'm looking at right now is the fact that the yen sentiment, 77% of clients are net short the yen right now, and yet the yen is going absolutely bonkers in the downward direction. So all the pairs against the 77% of people right now are sitting on the wrong side of the trade. Consumer sentiment, understanding these client sentiment, so important. So important. Kind of the same thing where you have gold is long, pound is equal. 77% of people right now are are short, right? Same thing. Yeah, oil's kind of flat. But again, don't forget, they have this little feature too, which is pretty nice. We're going to talk about it. So let's go over and let's talk about the VIX. Okay, to start off with the indices, we need to cover the VIX. So VIX is up 4% today, meaning we should have all the indices down. They're kind of holding firm right now. You're seeing the VIX is pulling back from its spike, and a lot of this is Kashkari too, throwing a monkey wrench in there, being like, hey, raising interest rates 2 times today. That's a big deal, right? With that being said, with it pulling back, you're seeing that they're trying to fight back. Now, NQ is having a rough day. I'll cover that in a second. But right now, with the VIX spiking up, it's kind of peaked back up again. This is not really a supply and demand based asset. I would say right now, the news for the morning is out. It should kind of stumble back down. And typically, even when you have that morning spike, the afternoons, it tends to kind of run back down again. Every day, you can kind of see it running back down, at least till the end of the business day. With it pushing back down, I wouldn't be surprised if we close back down at 1680, probably the 1680 mark, just a little bit above where we were. That should help propel the positive indices, the ES, the YM, and the Russell, higher the rest of the day, and maybe start helping us get this NQ back to even. I think NQ will have a hard time with that. I'll show you that in just a second. But on the other front, let's look at the dollar index. Dollar index took a big run up, kind of got pushed back down, but for the most part, the dollar index, the Europeans started the market here. We're kind of at the same point. So a little spike up in the European session, drove it down. No surprise, 10:30 in the morning, right there, this bottom candle, 10:30. We reversed back up again, and we're kind of where we started the European-based day for the dollar, okay? So we know VIX is up, but it is starting to retrace back again. We are in lunchtime right now, but besides that end of the day kind of closing, we should be kind of quiet the rest of the day as far as news goes. Now, ES, let's drop the ES back down to the 15 minutes. So ES off the open had a pretty turbulent open. Actually, let's drop this down a little bit lower to the 5 minute. As you can see, let's see. Here was your 9:30 candle. Okay. This morning we mentioned we said we were kind of bracketed in. We had kind of a top and bottom. Actually, I can just go to 15 on this one. We kind of had a top or bottom in, and with us kind of rallying up and opening up here in this top section, led us for a short trade entry. Remember, if you guys are not sure how to trade the opening, get down to your 15 minute and look for pullbacks in the really in the I'd say 9 to 9:30, 8:45 to 9:30 time frame is when you're looking for the pullbacks. That kind of showed us we were going to have a short day today. Now, you may say, what the heck happened at 10:30 today, right? 10 o'clock. This is the Kashkari news today about raising interest rates twice. Okay. You may say, why would that happen? Raising interest rates is bad for the stock market. Okay. When you raise the cost of lending, or actually, I guess the cost of borrowing, it's bad for them. Okay. It should help crash the market a bit. Okay. That's what this news does. That's how important this is. And again, this is the potential that we're going to see for FOMC. So right now, and again, I'm going to move some fibs around here. Let's take this fibs from yesterday. There was a short trade in there as well as a long from that same level. We don't need that right now. Let's take fibs from our low yesterday. I'm going to have to change it around. And we'll come back up high. All right. Let me change. Sorry. I have a couple different settings that we're going to use here. Let's take this, go here, here, here. Let's change that to this. Let's change that to purple, so it's a little different. The 50, let's make that black. I think that's it. Yeah, that's good. Oh, you know what? Let's do percentages. Let's put them on the right, and top is fine. There we go. All right, so you can see the major crash from this morning. We pulled back from yesterday's bottom, really from yesterday's open until kind of the open this morning. That was kind of the peak right here. You can see we kind of had this pullback into the 50%. Now, again, fib traders, they're typically coinciding with other trade strategies. There is actually a small level sitting right in here, right? So again, it is a level that has been tested, and it's one I think that you needed to watch out for. We're looking for a reversal. Now, the reversal in this one came a little bit late. The 10:30 candle is actually here. Okay. Unfortunately, the reversal only happens if we're driving in a direction. News is what trumped it today. And then again, we had that parabolic move to the downside at 11:30. So again, the Kashkari news drove us down. It did drive us back down in a parabolic fashion into a 50% retracement at a levels of buyers. This is a reversal signal. Now, it's a little bit too late now. If you got into it, I think it's a pretty decent trade. Reason why I like it, and again, fib traders will be using somewhere between the risk level, somewhere between the 50 and the 61.8. Again, Nadex traders are going to be using this 50 as their entry level. I like it because we had such a strong push in. We did have a level of basing, and you can see we had a little bit of a hiccup here. I would say top side, and again, depending on when we get there, I would say that the target for this long should be sitting up here at approximately 47.92. Think it's a great trade. VIX we see is starting to kind of slow down and roll. ES is really trying to fight to put in a positive day. If the VIX continues to deteriorate and go from 4% down, if we have no other major headlines, this should continue to rise back up again. Now, are we going to be able to have a new high today? Are we going to break 48.08? I think the fact that we had so much movement off of, whoops, that's not what I want to move. I think because we had so much movement off of this kind of opening area, and again, the 9:30 candle was this red one right here. Again, starting there with a little bit of a red, kind of a telltale sign that you should have been short at the open. And again, blew through a million stocks, a million strikes on the way down. I think we really got to get a confirmation above this level. For those of you that know what the Harry Potter trade is, I think if we get that confirmation back down into this level, get some decent space, that should be our launch point with a break above. But again, we need the confirmation out the top. Part of the problem right now, and why I'm saying we don't really have a lot, and again, when I short off of this one, you could, but I really would like to see it come up and start the base. I think it has every right higher until we really get true data on what the interest rate change looks like. And again, remember, the market's kind of already factored in a little bit. So I'm thinking there could be potential for new longs. but 48.0850 long is kind of what I would like it to burst through. And here's why. Okay, let me explain this real quick. I'm going to take one step back. The reason why I'm so excited about this is because, again, it is a high level. Every basic trader in the world knows what support and resistance is. Okay. Because everybody knows what it is, they're looking to say, hey, listen, if we break that, we're going long, baby. Yes, do that. This is the ultimate trap. Okay. As price goes above, everybody knows you go long, you put your stop loss below the level. And that's why you see these pullbacks. Okay. The reason why I want this to kind of break through base and pull back in the level is because I want every single one of those people that is a support and resistance trader, I want them stopped out. And then where their stop loss is where I want to get in. I want to get in for cheaper and then take this long. Okay. So yeah, can we get there today? I think it may have a little bit of a problem coming through, but I'm looking for a pullback to punch higher. As I said, I do believe there will be a hawkish tone tomorrow, but I believe that the market has already factored that in there. The market already knows that. And again, especially after Cross Curry's kind of pound today, I would be looking for opportunities to go long. So I think targets to the long side are 47.92. I don't think we have any problems hitting that when it's an area of interest. It was a parabolic move off Cross Curry comments. Again, highly emotional to a 50% fib retracement off of yesterday's low to today's open. Okay, so there's ES. NQ. NQ also had the drop. Kashkari definitely helped out with this one. This one was more or less doomed anyway because of Apple and Tesla. Okay. Now, we did talk yesterday about a break below. We had an alert. You guys can see the alert channel in here. We had a level that we liked, but we really wanted to know when it was going to break through this level at 16,282. We were looking for really a continuation down into the psychological level of 16,200. It did that, and magically, again, this line was drawn here yesterday. We drew basically blowing through this level and coming down and targeting here, right? It stopped like a dime and literally is now basing back and forth again. So I think NQ has the opportunity to start retracing. Okay. NQ is the perfect storm, and you may say, well, what happened with Apple, right? Well, yesterday was an amazing day for Apple. It broke through new levels of being a huge, huge target, large company, first time ever, right? All record breaking. Today is a day of profit taking. Okay. Such a huge explosion day, brought it to a new kind of all time level. It's a profit taking day. You got to sell it. That's why we're seeing it pull back. Again, seeing almost the same exact base. Look, here's NQ. There's the hit and the hiccup, right? Higher lows. Apple, almost the same thing. A little bit lower, but now it's trying to start putting in something and start gaining its round back again. I think Apple has the ability. I don't know if we can get all the way back to 83 today. But again, any great news with Apple, I think this continues to push through. I think it continues to drive higher until interest rates are risen. Now, Tesla, again, Apple's only down 1%. You can see NQ's down 1.6. Tesla is down 3.5. It was worse. It was worse, and it looks almost exactly the same as well. It pushed down. Now, it looks like NQ. It has put a higher low in, right? And is now driving back to retrace this. Now, this is Kashkari. This is also news. And again, everybody's mad at Tesla because they've just opened up a Tesla store in the province that everybody is very upset about in China. And they're saying, oh, they're supporting it. They're supporting genocide. Tesla is not supporting genocide. They're expanding their business. It's like if McDonald's opens something there, is everybody going to jump on McDonald's no, guys, it's not. So Tesla's in the news. And like I said, there is plenty of bad news for Tesla, right? There's plenty of bad headlines. Tesla has continued to rise and rise and rise and rise. It made it over the $1,000 mark last year. Elon is not secretly trying to support the regime. Elon is expanding the business. It was pre-planned before anybody. It's not like he just snaps his finger and an office pops up, right? This is not like a pop-up food stand. This has been in the works for a long time before anybody was putting sanctions or anything else over there. If whether he opens it now or he opens in 6 months when everybody forgets about everything, it's not going to make a difference. So people are a little bit negative on Tesla today and like, oh, negative news is bad. I have to sell. Tesla is fine. Tesla will continue to rise again, but that's part of the reason why we're seeing Tesla already start to fight back again. It was down a total of 80 at one point. And then, since that time, since the bottom at 11 o'clock, has rallied back about 35, almost half of its retracement back again. So, again, interest rate's not great for Tesla. But, think about where Tesla is. Are they insulated? Yeah. Are they leading kind of yeah. I think Tesla's okay. So, if we can get these two to really kind of keep this bottom in, and again, if the VIX continues to fall, it was 4. Now the VIX is only up 3. As that continues to deteriorate, it should provide some selling and coming back again. And remember, everybody that was short because, oh my God, everybody hates Tesla. They have to get their profit. If you are short, how do you capture profit? You buy it back again, right? So again, as that buying starts to occur, buyers step in, Tesla and these two should rise, and Q should be the same type of scenario. And again, finding that bottom down here at that psychological level. Now, YM, you may say, well, wait a second, what's going on? YM didn't have a big hit. Nah, it's manufacturing, right? We're seeing this continue to rise. The 36,500 we rose through. Again, this one, it's odd. This one, its 1030 reversal was literally the top, right? Actually, yeah, 1030 was the actual peak on this one. Because where we are, there's not really levels here that we can start selling off of. It's really about finding buying opportunities. Unfortunately, this was continuing to drive. The Europeans took this one, and European markets, European traders stepped in right here, right? Right here, breaking through that 16,500. And again, psychological level was a top, base pulled back, and then again, confirmation has continued to rally higher. This could be a new level that we're interested in selling off of in the future. It is not the best. It is kind of the 2 wicks are exactly the same, and we're pulling back right now. But it's kind of the same thing. Is this the bottom for the morning? It is the strongest of all the indices. If the VIX is now down to 2.65 from 3 just a few seconds ago. If the VIX continues to kind of deteriorate and go to the downside, down VIX means green indices. Again, finding a bottom here should help propel us higher. Where our next big, I would say our next big psychological levels are pretty easy to see. I mean, we literally this morning, it's not lost on me that we literally hit right here is the 36,800. I would say targets for later on this week and actually maybe even tomorrow, 36,900 right there, and the magical 37,000 right there. Okay. It's so close. I just want to make it perfect. There you go. There's your 37,000. So, yeah, I mean, YM is blowing it out. We have good ADP data tomorrow. Tomorrow morning should help propel this higher. Again, market has already factored in everything for FOMC. I think tomorrow, unless they come out and say, "Yeah, we're going to raise it 2 times this year," tomorrow, which again would be pretty aggressive for the first day, especially if we have more or less red, minus YM right now. I think the market's got a lot of it filtered in. I think I think we could hit 37,000, before the end of the week. Until they actually raise that interest rate, yeah, there'll be some pricing in. But right now, numbers look good. Numbers look good. And again, Christmas, there was some records broken. Russell. So Russell, it had this big crash right at the open. And again, Russell had come up to an area. We talked about it the other day, 22.83. It's a line that we've been looking at. We knew sellers were in the same vicinity and the same thing. This kind of green spike up was the Russell. It was in an area where you should have been looking to take shorts. It spiked down and literally found the buyers down here at 2250. We mentioned that 2250 has been kind of a magical number for it, large psychological number. And that's exactly what we ran into. It literally bounced right off of it. And now the same thing with the retracement. Whoops, not that one. For those fib traders out there that are looking for some fun, you can see right now it's kind of hitting back and forth on the 50. It hasn't broken the 61.8, but again, the VIX is down at 2.63. It is low volume right now because it is 12:30 in the afternoon on the East Coast. New York traders are obviously eating lunch. I don't think they got nearly as much snow as we got. But once they come back in, again, if that VIX continues to deteriorate down, this should continue to creep back up again. And for the most part, I mean, VIX is basically dead flat right now from where it closed yesterday. Does that help us kind of propel a bit higher? Yeah, I think it can. I think it can. I'd just be cautious. Russell is the one that is, rising interest rates will hurt the Russell the most. If we continue to see this rise, even though it's priced in, I think the Russell has a great short opportunity for tomorrow. I think YM, again, big companies insulated, ES, big companies insulated, tech, obviously insulated. People can't live without their iPhones. Their iPhones and Teslas, right? iPhones and Teslas. Russell, obviously, this is going to be more of the small guy. They're going to be affected by it a bit more. So I think there's some short opportunity there. With that said, let's go across and let's talk about some of the currencies now. So currencies is kind of a wild ride right now. And when I say currencies, I'll do currencies, and I will mention Bitcoin, and even Ethereum is up 2% today, only because bonds are just getting absolutely crushed. Now, we typically see bonds get crushed at the start of the year. To start off with this conversation, let's talk about the dollar. Dollar basically flat. Two interest rate rises. Again, that kind of helps stabilize the dollar. It's more or less at a level of equilibrium right now. You can see, I mean, we based here. We ended Friday. We came back up and based in it here, bounced off of it, based in it again. We're basing it again. This 96.22 level seems to be a very almost like a magnet for the dollar right now. Um, Again, raising interest rates brings power to the dollar. I think at this point we look for the dollar to kind of weaken back down a little bit, only because again, I think the Europeans are going to take this and spike this tomorrow before the US based session. It will have some movement in the morning for the most part, but again, this will dictate all the US based currencies. I wouldn't say it's at a major level, really top or bottom. And again, let me bring up the 30 so we can get more candles in here. You can see as far as kind of big areas, we do have a big area up top, and we're not really close. Just no, again, we're not trading the dollar index itself, but 96.63 is a big level. We're not quite there, and then same thing bottom wise. We this yellow area is really where we've kind of stabilized, or even down here. I mean, I would say right now this is kind of our top to bottom range right now. I'll turn this blue. We're kind of smack in the middle, a little bit on the high side. So, you know, market knows we're going to raise interest rates. I feel like a lot of this is baked in. We'll see where it gets kind of pushed around to tomorrow. But I think we have some potential in this one. Again, using this tomorrow morning, seeing where the Europeans driving the dollar, if they're going to make the dollar strong or the dollar weak, I think will help for a lot of different currency trades, not only for the ADP data in the morning, but also FOMC. Now, currency wise, Aussie dollar. You may say, well, why the heck did the Aussie dollar jump? And again, you can see we blew through our first line here, which again, we weren't really a big fan because it had already pushed all the way down to the bottom. Look at that second level. I'll send it across. There was your second level. And again, 7:30 this morning, 8 o'clock, nothing but straight up, right? All it did was a parabolic retracement move. I would say I'd like the Aussie up high like this. Again, you may say, well, wait a second. This is all dollar weakness. What the heck is going on? Isn't this all great for the dollar? Yes, it's all good for the dollar, but at the same time, it's acknowledging gold. Gold, the Aussie is going to be the proxy for gold. I would say right now, I would probably be looking for shorting opportunities. There are some levels up here. I mean, there's a level I would say sitting probably more in this range. It's an okay level. I mean, again, it based off. I'm trying to use the whole candle with a bit of a confirmation there. And again, remember, if this then that. If we can get the 72.57, I think that's a decent rollover, especially with the move we've had today. Really, from the low at 7:30, this is up 65 pips. Let's see the daily ATR on this one indicators. Why is it saying new? I think they're messing with my thing here. Yeah, the daily ATR is only 63, right? Just from this morning in, if it's 63, we're up but to its peak 63. So we did one entire day's worth of movement in just the US based session. We were already looking to go long from that 71.90. So again, it just kind of completed the target to the top side. I would say look out for that for the top. As far as taking another long off of that, I think right now this 71.90 becomes the target for reversal. Whether this is it or not, I love how fast it went up. I love how it was, again, very aggressive, no red candles, and then they're all. I would be looking for selling opportunities. I think 70, 72, 57, 58 is probably where we're looking. Depending on what time and if we can come up in base in here, we may need to go a little bit higher up there, but I'm okay with that one. I think this is just too much, too fast. And again, it's nothing but dollar weakness. And right now with the Dixie up just a little bit, it did this much movement and the Dixie is basically flat. I look for this to kind of find something and drop a little bit lower. And I know I talked about it here, seeing this kind of get weak. But remember, a lot of this right now is being a proxy through gold, which is up. Gold is up big. Gold is up 7.3 or 0.73% right now. That's what's driving the Aussie strength. That will also wane with the dollar weakness coming down again. Okay. Aussie yen exploding through the roof. Now, Aussie yen is also approaching a level, and this is kind of why I'm also looking for the Aussie dollar short. Again, the yen has just been going absolutely just dropping through the floor. All the weakness in the yen has driven the Aussie yen, the euro yen, the pound yen, the dollar yen through the roof. And again, I talked about looking at consumer sentiment over here. I think I can grab it. Here, let's see. Can I find it? I didn't have this one queued up. Let's see. Aussie yen. Let's see. Is it going to show me the sentiment? Yeah, 64% of people are short this pair right now. And this is what it's done today. Right? It's better. 77 for the dollar yen. We are approaching levels. When this hits, and again, there's profit taking this one. It will be pushing the yen or the Aussie in a weaker direction. And again, that's why I think the Aussie dollar trade is also a pretty decent setup. Do I love this level? It's okay. I like the Aussie dollar level better. It is a flat. It did have a very strong push away. You can see that there is actually a little bit of a basing level right above it as well. Hopefully, we don't need that, but I think both of those are ones to look out for. And I do think, again, for tomorrow, with as much instructions we've seen in the yen, I think there has to be some profit taking coming back in. So I like these. These kind of carry over in the Aussie dollar short. Look for both of them tomorrow. And again, if you are short, the way that this base and kind of confirmed and then based on the top, I do think any type of short position, I think you should be looking for targets. Targets down at 83.88. Now, euro pound. Euro pound is continuing to collapse. Now, we had these two dotted levels on there, and we were really looking for some type of a basing and a breakthrough, and it didn't quite give us the entry. We were looking for a pullback here. It didn't pull back. This is one of those ones that I missed, but I was looking for a run down to the 83.40 level. We're there now and stabilizing. Let's see. What is the news for this one? Oh, COVID deaths. Yeah, it's all COVID stuff for the euro. Um, I've said this in the past. Nothing has changed with this one. I believe that this pair, I'm still bullish this pair. Reason why is I believe that the UK being a single nation, they will have a better control on COVID, even though it seems like they're having major problems. Like they were the first Omicron, and like everything first Omicron death. It seems like the UK and the Omicron just don't mix. Um, the European Union has many nation states, many scenarios. There's an outbreak of a new variant, a new variant. What was that? That Cameroon one that I found. Saw it this morning. It's a small outbreak in France. B142, yada yada yada, yeah, something else. It had, when they look at it, it has like 43 mutations and 37 deletions from what Omicron had. I was like, wow. I assume these things were mutating a little bit. I didn't realize there was 42 differences from the new one for Omicron. I don't know if that's good or bad. I'm not a virologist, but I know that that much change from one to the other one. I would love to say it's probably a great thing, but I feel like it's probably not. I feel like when you have 42 changes, 37 deletions, it's like rolling. Maybe one of those deletions was how mild Omicron is. Let's hope that it doesn't go any farther. That's why I feel like this one is a continued sell. Now, I mentioned this morning. Euro pound is an extremely important pair for tomorrow. Okay. Reason why that it is because the euro dollar is the most traded currency in the world. Pound dollar is, somewhat close to it. Depending on what's going on tomorrow with the European session, okay, if we see dollar strength or weakness, I'm kind of looking for a reversal based off of what we see in the European session. I don't know which way it's going to go. I don't have a crystal ball. I don't know if it's going to go up or down. But whatever way I'm looking for a reversal, I am going to use the euro pound to tell me whether I should trade the euro dollar or the pound dollar. Okay. Again, if it's a position where we're looking for weak dollar, and again, this is hypothetical. If we are looking for weak dollar based off the price action tomorrow morning, would I want to use the weaker of the two pairs or the stronger of the two pairs here, right? With the euro pound. If the pound is the weaker of the two and it's going straight back up again and we're coming up like this, right? And the euro's on a huge strong path, I do not want to trade the pound dollar if it's a weak pound that I'm trading weak dollar. You want to trade the stronger if this is what happens. If it continues to fall like this and it is still pound strength, and I'm playing weak dollar, you want to play the pound dollar. And vice versa. If we're playing pound strength, do I want to play if I'm playing dollar strength, do I want to play pound strength versus dollar strength? No. You want to play weak euro versus strong dollar. So it will determine which is going to be the best trading opportunity for tomorrow for FOMC. So extremely important. Overall, this one doesn't really have a lot of it has a very small ATR, 34 to 36 pips. I do think, though, that, again, this will kind of foreshadow what we should be trading tomorrow afternoon. Now, euro yen. It looks just like the Aussie yen, right? Difference is this one actually came up and has already pinged a level, showing us that we're already starting to see some yen weakness. Now, 131.42, it was an old level. We've had this level up here for a while. It was a confirmed top. We had the original basing. We had a touch, and this is a front run. It's had a very, very difficult time with that level. So it's not a new level. You guys saw this one last week. But what it did is it ran all the way up. So again, I talked about that Aussie dollar trade. I liked it. Why? Because the Aussie yen was in a situation where we see some profit taking. The yen weakening against other currencies. Well, that coincides with what we're going to see over here. Why are we going to see the Aussie yen weaken? Well, here's the euro yen. It's already bounced off of a level. I don't think it's already to 3 to 1. It's probably a little bit late. This one has kind of already come in, but we're already seeing the yen start to get a little bit of weakness chime in. And again, yeah, your 1 to 3 is right there, right? Perfect level. We're already seeing it come in here. I Same agreement. We saw euro pound. We saw European weakness versus the pound, but again, euro heading straight up. I think it's, again, same type of potential pushing back down again. This one, I will say, there are a few levels in here that you may look at and say, well, wait a second, that's not that bad. Yeah, they're not bad. And again, running some fibs off this low to high, I think it's important to talk about this kind of little level here. But I really, in this one, I actually like the 61.8 bounce better than I like this little basing at the 50. So I don't want to put too much on it. Um, At this point, it's probably a bit late to get into this trade, but I do know kind of those shorter duration scalpers are going to come in there and look at this and be like, wait a second, we're right at the 50. Now, this is the pullback. Do we go short? Do we go for the profit target? That's entirely up to you guys. I'm not going to go that crazy with it, but I'm just going to say that right now, again, it has strong push down and has kind of pulled back. And again, it turned where it should have. It's having some issues right now. Will we continue down? We're right at 50. There will be some traders stepping in there as well to take this one short, but I think it coincides on a couple different pairs. Um, I don't like this zone. I actually am okay with this 130. I like the way that it held there. We do have an alert the next time it comes down here again if this breaks. I think 130.12. If we're going to stay short, I think that's a target first. But I do think that there could be a potential bounce over this tomorrow too with FOMC. All right. Euro dollar for tomorrow. So euro dollar, we were looking for this to retrace back up. We didn't know which level. We had two good touches, and actually this should be right about there. We were looking for it to move, and it didn't. It came through a touch. It actually went to the lower area on this one. We were looking for a little bit more of an aggressive entry. You can see it was actually the more conservative entry is where it really took off from. We were looking for up. It went up and it based. I wouldn't say the euro dollar is doing much. 24 hours, it's moved 11 pips, less than a pip an hour. So euro is really just not. It's not moving much right now. It's kind of, if anything, it's kind of more weak, right? It's the week of the pair, and we're really our next level is down here at 112.63. This one has been pushed to the brink. It's a mirror bottom. I don't think this one holds again. I think really the next level that we're looking at is probably, and again, I don't even love the zone there. This one's going to be rough, unfortunately. I don't love any of them. I kind of want to see where it stabilizes. I'm kind of rooting for it to go up. I like to get some decent top and bottoms. I like the 113, 113.80. It's a bit of a run for tomorrow. That's about 88 pips. That's going to be a lot of kind of. It's a lot of dollar weakness to come in from now till tomorrow. Um, a lot. It may be easier if it kind of pulls back up, and this is only about 60. This may be the level we're looking for tomorrow, although it's a little bit early to kind of foreshadow what we can do. Um, I, if this starts to go higher, it's not stopping until we get up top, probably up in that level. Um, but if we have, if our news event comes in tomorrow here, right? If price is up here, I think this is a decent level short. Again, we got to see what it looks like in the overnight. But right now, there's not really anything active today for this one. Euro yen, yes. Euro dollar, no. Pound yen. So pound yen actually did have a level. It is a level that kind of choppy. And again, we kind of blocked off the entire basing, right? It has actually punched through that just by a little bit, but it's all of a sudden put in a lower high. So we're kind of in that same range, kind of the same push. Now this one is way overextended. This one since really the European Open till 11 o'clock, 170 pips. That's more than a daily ATR. We're high, I would say also. I would be looking for, and again, this is that scenario that I just talked about with the euro pound. It's yen weakness, right? We're seeing yen weakness here. We're seeing it here. We're seeing it here. But we're also seeing pound strength versus the euro pound. So that's why we're able to kind of blow through some levels. I do think there'll be a little bit of profit taking in this one. But at the same time, I do think the yen will kick back a little bit. I do think the pound will probably kick back a little bit. But I'm definitely in the bullish camp for the pound. So it's one of those ones. It's kind of strong. Do you really want to mess with strong, or is there better opportunity? I think that there's better opportunity to take it in other places. So again, it's not my favorite as far as the retracement goes. Will it retrace? Yeah, sure, a bit. But I also think we'll get some pound weakness. So it'll be kind of a little bit of a pullback. But again, I like this one to continue higher. I would not trade pound yen though for FOMC tomorrow. Avoid this one. Now, pound dollar. So I like the pound dollar was rising. There was actually a level in here, and again, it pushed it pretty much all the way, but I kind of liked how it rolled off this 150, 135.19. It did hit it, pull back, and started the base, which again, telltale sign we're going to break through. When we ended with this green here, and then we opened and kind of started fluctuating, you're out of this position. You're definitely not taking this one short. Okay. And again, this would have been a very, very quick in out. Like, listen, we have no interest. Get yourself out of break even. I would say where this one is at right now, I would delete this level and I'd like to see a new top. I like this candle. The big question is this candle going to hold as we're seeing that dollar strength pour back into the market? There's a decent candle. I like the formation. I like that it's pulled down and kind of base. I like that it's touched it. The question is now we need a red close below this level. Okay, to show us that we have a confirmed trend change. And again, that would be a red, green, and then a red close below. That is one sign of a trend change. Now, question is, how much do people pull this down? Again, we know that in the rising interest rates is definitely something. Kashkari is obviously, he made some comments, but again, the strong pound beat the strong dollar in this one today. Strong dollar is down. Question is, do we hold high for tomorrow? Right? And this is why I said the euro pound is going to be so important for tomorrow. I wouldn't be surprised to see if this starts to tick down as the market starts to prepare for that dollar strength coming in. If we have a disappointment tomorrow, it's going to need to grab some type of a level here, something over here for all this news to be able to turn and bounce off of. And again, what this is them saying what everybody already knows, and then every retail trader on the road going, oh my God, they just said this. Yes, but the market had already prepared for it. It's setting up a trap for them to basically assume that the dollar is going to be strong, but it was already priced in, so it does the exact opposite. And then it gets weak trying to capture all those people. So kind of looking to pull back again. I mean, I think, there's a decent level in here. There's a decent level in here. Really, there's a decent level even right here as far as news goes. I think really any of these levels can be pretty decent as far as change these are not shorts. Any of these three levels in here, again, this one not as much. I like that one much, much better up here. I think any of these levels could be potential pops, right? Based off of what they say. But where we are right now, I would say that it's kind of more set up the way that it's set right now. If we, profit taking comes in, the pound weakens a little bit, dollar strengthens a little bit, pulling back down. And again, could you get long? I mean, the other option too is if the European Open is sitting, if we pull back and the European Open is like sitting somewhere like this, actually European Open would be, oh yeah, right there, right? That could be long before news, before another spike down. So a lot going on with the pound dollar. Right now, I would say more bearish. It's at a level right now. We need to close red. If it closes red, there's probably a short this afternoon until at least the European Open, which is right here. So use some caution with that. Dollar CAD. Yeah, I was looking for a pullback. Look, so talk about wanting to get short the dollar CAD. And again, this red in here, we're looking for a break of this one. And we got it, but it wasn't really the best of breaks. Our target was down here. We just hit our target a little while ago. Look how close this missed. This is the most frustrating thing in the world when you're like, oh, I got a short here. And then you missed it by 1.4 pips. So yeah, was looking for the short, never got the entry in there. Again, expected it 1 to 3 was to this level. You can see it blew it. It had no problems. It based and then continued all the way down to our overall profit target. So, this should be right there. Yeah. And again, a lot of this right now is oil, right? Oil is up 1.53%. OPEC, have trust in OPEC. With it pushing back down, it's just bringing dollar strength or dollar weakness in, CAD strength in. I would say look for opportunities to go long. There's probably a level in here that we may go to. We know we got a couple levels down here just a bit lower. The way to look at this one is kind of see, again, couple factors. One, what does the API oil inventory report at the close of business today look like? Okay, that's going to move the European market around. Then tomorrow morning at 10:30 a.m., we have the oil inventory report, the EIA number. That's going to move oil around as well. Based off of what OPEC says today, I wouldn't be surprised if it's a negative number. Okay, that can help propel us higher, or propel oil higher. That should help bring us down. Right now, it looks like oil is helping us position the dollar CAD for a long for FOMC. Okay. Where the level is, we got to kind of see as we get closer. It may form a new level in the overnight as profit taking comes in from the short and bounce. Not sure, but I would be looking to get long tomorrow. Let's see. More of a we're at 2 o'clock. Yeah. Yeah, here. I don't know where it is, but I'm looking for this to go long from FOMC. Okay. Don't have the zone. We need to find it on the way down. Could it potentially be this level? Sure, it could potentially be that level. I just don't know yet. We got to get a little bit closer. It's more of a tomorrow morning thing. Dollar Swiss. If you guys attended yesterday, you knew that we were looking at 91.90. You need a little bit more space. Dollar CAD, it was like, oh yeah, so close. Go short, go short. Dollar yen, we were looking for the short, and it ended up the yen imploded on us. But the dollar Swiss had a little bit more to go. Great dollar Swiss trade in there. It took a while, and this is the dollar Swiss. Anybody that trades it again, hit it, came back, hit it, got lower. Again, it was obviously getting lower lows, and the highs were getting lower. So a nice trade. It just took a while, and this morning is what completed it. It was a parabolic move up into a prior level, and again has pushed basically almost back to the origin of the move. This is CAD. This is Swiss strength. It's kind of the similar trade setup. I would be looking for long opportunity out of this tomorrow. It doesn't push all the way down to this level for the news. Could be, but I think getting long the dollar Swiss tomorrow will be important. Again, anything that drives any strength towards a dollar, the Swiss is not going to put up a whole lot of strength. It's more of a geopolitical pair. I will say, with the United States admitting it and Russia and everybody else saying nuclear weapons are bad, we should never use them ever. Everybody agrees, right? Nope, we shouldn't use them. That is obviously hurting the Swiss a little bit, but now all that data is kind of wearing back off again as we come back to it's helping right now, right? It's bringing some strength in, but that will dissipate pretty soon. And I think dollar strength tomorrow is the way to go. But profit target is out. Any of your shorts on this one? Again, I think you should be gone. Dollar yen also pushing into new highs. And again, I'm kind of looking for a top level on this one. Dollar yen, I would not trade for FOMC tomorrow. There's too many factors involved with it. We do have a decent top. Maybe that becomes our new top on there. I would say this one has a couple different areas to trade. I mean, if you're just dying to trade FOMC off of it, there's a couple levels in here. Again, really the only clean long that I like is down at 114.68. But there's a couple levels. Again, see what it does in the overnight. But right now, I wouldn't want to get in the way of this one. Yeah, I know that the yen, I keep saying the yen's going to get weak. We should expect all these to pull back down again. But at the same time, I think the dollar has more power than the proxy of the yen. Okay. Bitcoin. Bitcoin, you see, is pulling back again. Bitcoin had a bit of a Kashkari reaction as well, pushing to the downside. Really up at 47.93 is where people were looking for this one. I think 46,000 is going to be the big number if we push through. And again, there's buyers that have stepped in right around this 45,800. Is it an amazing buying level? No, I wouldn't say that. I mean, you can see that this level was a bottom. Number 4 broke through, and then all of a sudden it was a top. Number 4 broke through, and we're kind of dealing with it again. It's one of those levels that it really likes right around this 46. If we can break through 46,000, I don't know. I've heard people call it targets of 41. Fib traders are saying 4150, 41,500. I don't know. I feel like if we can go down to 41,500, there's going to be a lot of negative people on Bitcoin. But meanwhile, Ethereum is blowing through. It's up 2% today. So Bitcoin, I think we're more or less down the rest of the day. Ethereum having a great run. And again, I need to follow Ethereum a bit more. I would say it's pulling back probably. I mean, I would say if you're looking for some buying, there's probably some buying in here. I think FOMC will be easy tomorrow. I think that the risk for all the current the cryptos right now is going to be there are 3 Fed positions open. If the Fed starts to take a stand, and again, I guess Raskin is in. If Raskin is going to be really hard regulating, taxing. I mean, the cryptos are begging for regulation right now because they don't want to be kind of blasted into thin air once the digital currencies are there. But I do think 2022 we will have at least 1 or 2 official digital currencies from large nations. So hard area. But again, Ethereum is the stronger, and again a little bit of a pullback. Now I'd watch for a break of this level. TLT is important. Again, bonds continuing to collapse in the start of the new year. Extremely common. You tend to see this all over the place. We will get a stabilization, but again, rising interest rates. Again, rates and bond prices, they have an inverse relationship. But again, bonds being down, the money needs to go somewhere. And again, that's why, the VIX is down at 2% right now. We should see these guys will pop once lunch is over, which is almost there. Should be back. Now, oil, okay? Here's oil today. Again, I think we're waiting for the API report. OPEC Plus had a little bit of a reaction and it's kind of stabilizing. I think 77.92 is really kind of an area that we're focusing on for potential shorts. I'd like if we can get driven up there before the European session. I think really what happens tomorrow morning right here is going to tell us a lot about tomorrow. That's when we'll start kind of the blue box here till 8:30. Again, that's the European quote oil session. Very, very important to see what happens. Again, we've had a lot of this down up. Then we had kind of the up and then kind of down. It looks like it wants to struggle today. Um, as I said, I said I mentioned it. OPEC said they are not changing the 400, right? They are not increasing it. They're going to stick with the existing policies, which I think is fine. And then they also made this comment about, hey, listen, we're flexible enough. We can manage the demand ourselves. We don't need your help. Again, the United States, we can manage the demand as well. We have plenty of refineries here. We don't actually need OPEC Plus to do anything. So it is interesting that they are once again trying to say, no, no, we're in control. We're going to change it all. And we're going to continue to let them have the power. So very, very interesting statements from OPEC. Again, I'm thinking we're going to have another negative number tomorrow. And I wouldn't be surprised if, again, Europeans drive this down and look for a long. Europeans allow this to creep back up again, look for a reversal and a short tomorrow. But again, tomorrow morning trade, use the 10-3, the 10, I'm sorry, the 35 and 1 strategy at 10 o'clock tomorrow morning, and you'll be good. Natural gas, kind of getting blown up. And again, it was in an extreme level. It came up this morning at 7:30 and dropped. It's back at that kind of equilibrium level right now. Right now, it looks like really our top and bottom. I can move this up here, right? Our top and bottoms of this one are really kind of the two extreme ranges. I will say I do believe it's right. Yeah. Fib wise, we're kind of messing with those 50% targets right now. Natural gas, right now the East Coast, I have 10 inches of snow outside. It's kind of slowing everything down on the East Coast. It's supposed to get warmer later in the week, but then there's another snowstorm coming. I think natural gas is waiting for some headlines. I know there's 850,000 people without power right now. You're typically, not using as much natural gas when you don't have power in your house. You're finding somebody else's house. So again, not necessarily surprised that this is so far down. I would look for buying opportunities. I'd like it to pull back down if you can get to 354. Take that opportunity. Not there yet. Gold. Gold has stabilized. We talked about gold breaking through the 1798, and it did. We were looking for a bounce, and it did. It gave us a bounce. It kind of hit this level yesterday a bit, and then used the 1800, and then we hit 1800 again at 7 o'clock today, hit that same level, that 1798, right here. And then it was off to the races. Koch Curry helped us out on this one, said there's inflation, it's bad, we got to do something. Right now, though, I'd be careful. We're running into some sellers at 1815. I'd like to see what the Europeans do. Right now, we're kind of in the middle of the range. Fib traders are going to look at this and say, wait a second, we're at the 50%. I got sellers stepping in here. Should I be going short? Yeah, I'd say it's not horrible, right? It's not horrible, but I would be a little bit cautious with it. Acknowledging that inflation is worse than expected should help gold go higher. But if they are very hawkish, saying we're about to crush, we're going to crush inflation. Remember, gold is a hedge for inflation. It is not a hedge for rising interest rates when you're smashing inflation back down again. So a lot of the trade on this one has already occurred. But again, we're kind of sitting right in the middle of the range right now. Be cautious with that. Again, great trade set up this morning off of that 1798. Definitely a number that we want to watch out for. Now the question is, have we formed a kind of a confirmation level up top around the 500? Is this a potential short or a target for tomorrow up at 1829? Looking at silver. Silver, we had this trade, and we mentioned yesterday was kind of risky, right? These levels were formed on the 30th. We didn't love it. It went to its full target, right? But I was like, I really need a day. I need some type of confirmation. Well, we got that confirmation. It came back down again this morning, 7:30 a.m. Grabbed the target, went all the way back up again. But 2266 seems to be a level to watch out for. Now, silver has a level much, much higher. We got a level sitting up here at 2362. There is kind of that same intermediary, just like kind of gold has, sitting up in this level. I think silver will do a little bit better than gold tomorrow. I'd like it to get to a zone before. I think the ADP number will probably help start moving it a little bit, but I think this could be a decent one. If you guys are unfamiliar with trading gold or silver, particularly at FOMC, again, protecting it and keeping as much risk. Again, options are a great way to trade that one, whether through Nadex or somebody else, I think is the way to go. But for the most part, that's pretty much it. I would say, you know, one thing too, again, that I'd watch out for, go over to go to daily effects and then seeing some of what these sentiments are. Again, right now, 78% of people are short on dollar yen. They've all lost a ton of money today. Gold, it's going up. It's 73% of people are net long. How can all these people be wrong? All these people are right. I'd say watch out for that kind of reversal. We just saw again, gold is at a 50% fib level. Kind of watch out for it. Wall Street, 78 people. Right, and again, bullish indicators are saying this is going up. 78% of people. If everybody and their brother is short, what's going on with this one? And again, you guys can see if it's at 36,000 right now, right? It's at 36,000. This is the strongest of all of them. Has pulled back, 1030 reversal, but it's up 0.6% today. So again, everybody's losing money being short that one so far. So just be cautious. And again, watch out for FOMC. That is going to be a big one for tomorrow. All right. So that is it for today. Again, kind of flies by. I always look down. I'm like, wait a second, I'm a little bit late today. Mark your calendars. Obviously not for the 4th. This one is going to be, next week. Actually, I'll just change it real quick before it's on the recording. On the 11th, there you go. January 11th, 12 p.m. Eastern Standard Time. We will be back again. Again, sponsored by Nadex. Thank you guys so much. If you guys have any questions, you're more than welcome to send me an email. Again, send it all. Questions, comments, recommendations, anything you want, send it to support at keeptrading.simple.com. Thank you for joining me today. And again, I'll catch you live tomorrow morning on YouTube. And again, happy trading this week and happy new year.